Stocks trade ranged after the FOMC minutes point to a restrictive policy stance, even as US steps up its engagement on the Israel-Hamas war. Energy and metals gain, even as IT drags and mid-caps fare better today.
Tata Consultancy Services reports a quarter-on-quarter revenue decline for the first time in 13 quarters, dashing hopes of an early sector revival. IT, however, delivers strong deal wins and margins even as headcount declines sharply.
Another corporate biggie, Aditya Birla Group, is set to hit the street with a fundraise. Grasim has indicated it will consider an equity raise at its board meet on October 16th, and investors hope that the funds will be used for capex or debt reduction.
And Glenmark's pharma arm, Ichnos Sciences, inks a drug license deal with Astria Therapeutics that will net it $320 million upfront development and milestone payments, besides low double-digit royalty. The stock bucks up in trade.
And Maruti gains after it ups its export bid with the 5-door Jimny Aster DM. Also, healthcare gets a lift on reports of high interest from buyout investors, while Samheeb Hotels as well as Zaggle Prepaid react to their first quarter results post the listing. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar, and with me, as always, is my co-anchor Pavitra Parekh. Hi, Pavitra. So at the moment, market is looking quite flat. So if we really talk about Nifty 50, just about 19,812 levels. Let's take stock of the entire market at the moment. And sensex is also on the flat line with a negative bias. And on the other hand, Bank Nifty is also trending on a flat line, but positively 0.15% gain at the moment. And mid caps, that's a spot which is doing much better or performing better than the other key indices, and comfortably in the green, 0.344% in trade, closer to the high point of the trading session today. Advanced decline ratio, because of mid cap participation and they outperforming the rest of the markets, is doing far better, and advances are better than the declines, and the market strength is looking good. But when we look at the lunch hour trades in terms of the gainers on Nifty 50, well, Coal India, the PSU, is doing extremely well, along with BPCL, Power Grid, NTPC. So some of these PSU counters are doing well. And also Maruti, JSW Steel, Bajaj Auto. So some of the auto sector companies, as well as the news-driven companies like Grasim, as well as Maruti, doing well in trade. Pavitra.
Oh, absolutely. So this pack has been doing well. And, you know, this has pretty much been the way the entire day has gone, right? There's really not too much happened. We've been trading in a very sort of tight range all through the morning. And for now, we've actually even moved into the red right now on the Nifty. In addition to some of the stocks that Nisha was just pointing out, a lot of metal names from the broader markets as well. So take a look at names like MMTC, MOIL. We'll tell you why in just a bit as well. But we have MMTC, MOIL, something like an NMDC, GMDC, all of these stocks which are seeing big gains come through today. This is, of course, what's happening on the larger index stocks. What's not doing well, of course, you have TCS, but that has dragged down the rest of the IT pack as well. So you have Infosys seeing cuts, you have HCL Tech seeing cuts, pretty much all of those names under some amount of pressure. There's also a lot to track in terms of cues. You know, today we have both the India and US CPI data, which will come out. You have the crude prices, which have declined, but really in focus with the tensions in West Asia. And then you also have those big tech earnings. So there's lots for us to keep an eye on as far as cues really go. But let's kickstart Business Lunch by focusing on IT bellwether TCS, which is one of the top Nifty losers today after posting what was quite a mixed bag of Q2 numbers. So there was some good, but there were some disappointments as well. Now, on what didn't work, the revenue, of course, declined for the company for the first time in 13 quarters. It was down around 0.2%, which is lower than what the street was factoring in as well. Another big negative was that the headcount saw its largest fall that we've seen in 2 decades. And get this is in spite of the fact that the attrition was the lowest that we've seen in a long time as well. But like I mentioned, there were some positives as well that came through in the earnings. The margins looked very strong. There was an expansion of around 110 basis points. That's the figure up on your screen. And this is on a sequential basis. The company also reported its second highest deal wins, which came in at $11.2 billion. So, of course, that is something that the street likes the sound of. And the company then finally also announced a tender buyback of 17,000 crore rupees at a 15% premium. The management, when we were speaking to them earlier, did say that this is the most that they could do. So this is definitely a positive as well. Mixed set, like I said, but here are some of the highlights from the management interview earlier today.
Our customers are taking actions to handle what they see is a potential situation, which is resulting in, as I said, projects that are having immediate ROI getting more attention, and where they don't see the ROI getting less attention. We have taken steps this quarter. We are assuming some of them will yield results in the subsequent quarter also. So, and all our teams are geared up, particularly when you don't have good visibility on the top line. I think it's natural to focus on the bottom line, so that focus will continue.
We are, in making all the investment which we made in the past is now getting, eventually we're getting fruits out of it. And as a result, we are, attrition also is coming down. And as a result, we're recalibrating our hiring. So our hiring numbers are going to be less compared to our attrition. And as a result, I see, the number will be, lower significantly. If it is a low positive or a negative number is very difficult to say.
17,000 is what the regulations allow us to do. So let me explain. The regulations say that we can do up to 25% of the free reserves plus shareholders equity on standalone or consolidated, whichever is lower. Basis that 17% of our consolidated shareholders equity plus free reserves works out to be approximately 17,000 crores.
All right, and TCS is down in trade today over 1.5%. Now, moving on, India's CPI for the month of September and IIP for the month of August will be released later today, this evening. And that is going to be a key economic factor to really watch out for. So Lata is joining in with the review or preview of what's expected and what are we waiting for. Lata, tell us.
Well, our poll indicated that the CPI could be 5.5% compared to 6.83 in the month of August. So a fairly steep fall, and much of it will be led by food. Food is expected to come in at about 6.8%. Last month, that is for August, it was 9.94, almost 10%. And core CPI is expected to be slightly less. From 4.8, it may fall to 4.7 is the expectation. But I just want to point out to you, remember our poll of 5.5, most people expect the actual number will be much less. That's because the Reserve Bank, when they announced the policy last week, said that their Q2 average, that is July, August, September average, will be 6.4. Now, if you already, we know July and August, if you add, then by RBI's arithmetic, the September number should only be 5%. So most economists say our calculation shows us 5.5, but we won't be surprised if it will be more like 5.3 or 5.2. For that, vegetables have to fall a lot. They have to fall at least 13 to 15% if that kind, 5.2 number should be reached. But that will be, of course, very good. The market, the other number people will watch out for very closely will be cereals and pulses, because they were running at about 13% even in August. So one would like to see that falling a bit. The other number, of course, would be the August IIP number. Big number, 9.5 is our poll. But let's not get too excited. This 9.5 is more because year ago, August 2022 was minus 0.8. So though you know, it's the base effect. If you take an average of the two, then you will get something like 5%. And that's what was on, July as well. So it should be a run-of-the-mill IIP number if it comes at 9.5. Now, there could be a positive surprise, because when you saw the core sector numbers, cement and power were excellent. So it's quite possible we get something even better than 9.5. That will, of course, be very good.
All right, Lata, thanks a lot for laying out all of those estimates for us. Remember, investors will also be tracking the September CPI print from the United States. So that's a very important number to watch as well. And the estimates that we have are that we could see a rise of 0.3%. This is for month over month, and around 3.6% on a year-over-year basis. So that is the key global cue to track as well. But with that, it is time for a short break on the show. When we come back, we're going to get you all of the latest updates on the ongoing conflict between Israel and the Hamas. Stay tuned. Welcome back to Business Lunch. Let's now shift focus and talk about the big news developing in West Asia. The Israel-Hamas conflict has entered its 6th day. Israel is gearing up for ground invasion and have claimed that they will wipe out the Hamas. U.S. Secretary of State Anthony Blinken has also arrived in Jerusalem to take stock of the situation. Meanwhile, India has also launched Operation Ajay in order to try and evacuate any Indian citizens from Israel. We have Palki Sharma from First Post joining us now from Israel to get us the latest ground report.
It is day 6 of the war between Israel and Hamas, and we can look at the developments in 3 parts. One, of course, the escalation, the fighting, and what Israel plans to do. The second is the situation in Gaza, and third is the politics that is picking up pace. So let's start with what the Israeli operation looks like at this point. They are preparing for a ground offensive. Israel has now demarcated a zone around the border with Gaza, saying that anyone entering this area will be seen as indulging in criminal activity. And the Israeli defense minister saying that we will go into Gaza on ground now. So we will launch a ground offensive. That much is quite clear now. The Israeli war cabinet is in place. A unity government has been formed with Prime Minister Benjamin Netanyahu and opposition leader Benny Gantz, and they've been making some very strong statements. Netanyahu said that every Hamas member is a dead man now. Benny Gantz saying, and I'm quoting, "This is the time for war." So they are very clearly stating their intent that they will continue to pound targets in Gaza. The situation in Gaza looks quite bad at this point. The citizens have literally nowhere to go. They're looking to exit from Egypt, but Egypt has refused to take people. Egypt has refused to open a corridor for people exiting Gaza, and they are in conversation with the U.S. and the United Nations. So what happens to Gazans who are trying to escape this fighting remains unclear at this point. U.S. President Joe Biden, meanwhile, has issued a statement, and he has warned Iran against directly entering this fight, and that is telling, because if Iran does not enter this beyond what they've already done, then there is a very high likelihood that Hezbollah will not escalate the fight in the north beyond the odd skirmish. Also, the Saudi Crown Prince Mohammed bin Salman has had his first conversation with the Iranian president, the first in many years, and they've discussed the situation in Palestine. So perhaps at the regional level, at the international level, talks are on between among the top leadership to ensure that this does not spill beyond Gaza. That is how things stand at the moment. India has launched an operation to evacuate its citizens. Some 18,000 Indians live in Israel. More than 900 students, we are told, have registered to leave on these chartered flights that the government of India will be running starting this evening. It is being called Operation Ajay. The US and the UK have not announced any such operation. The US Secretary of State Anthony Blinken will be in Jerusalem today to discuss the way forward. So a lot of developments, a lot of fast-paced action, while the situation in Tel Aviv and I would say in most of Israel still remains tense, with the odd siren going off and sometimes false alarms also triggering a lot of scare on how this will unfold.
All right, Palki Sharma there reporting straight from Tel Aviv. All right, back home then to some somber news, and 4 people were killed and over 80 were injured after 6 coaches of the Delhi Kamakhya Northeast Express derailed in Bihar's Buxar district last night. Now, my colleague Saurav Rathore from CNN News 18 is joining in from Bihar to get us the latest ground report on what's happening and how are the rescue operations. Saurav.
Major accident took place yesterday night at around 9:53 p.m. when Northeast Express 12506 derailed at Raghunathpur railway station here in Bihar. The 23 coaches train derailed completely and at least 6 coaches overturned and fell on track. Now, the sad part is that 4 persons in this accident died and more than 80 are injured. They have been shifted to the local PHC and different hospitals in Ara and Buxar. Some of them who are critically injured have been taken to Patna, and the critical patients are being taken care of at Patna Medical College and Hospital. Now the rescue operation has been going on since night, and NDRF, SDRF, police officials and railway officials are conducting the rescue operations. And now the biggest challenge here is to clear the tracks, because already at least more than half a dozen trains have been cancelled, and several trains have been diverted from different routes. And the administration must answer as to what led to this accident, because this is the second accident just after 4 months when the Balasore train accident took place.
All right, very tragic accident there in Bihar, and like we were just pointing out, over 80 people injured and 4 dead. But with that, we are going to get into a short break now. On the other side, we're going to bring you excerpts from an exclusive conversation with the global head of EY as he speaks on how India is getting to the top of the global investors' wish list.
Welcome back. You're watching Business Lunch, and slight bit of weakness is setting into the market. In fact, more than earlier seen. And right now, Nifty 50 is trending towards the lower red zone. Now, IT as well as Pharma, these are the two spaces which are looking like the weakest points and are dropping further. All right, moving on to some big comments coming in on CNBC-TV18. The global chairman and CEO of EY is here in India just ahead of the announcement of his successor, which is, remember, expected in November this year. Now, speaking to CNBC-TV18 Shireen Bhan, he says that India is on top of the list for global investors. And he also said that there is huge appetite to invest in India, and also identified geopolitics as the biggest risk to global growth.
India is probably top of the list for global investors in terms of where to invest, in the next few years, or even more than that. And a lot of it has to do with, obviously, everything India has going for it. Obviously, the most obvious thing is demographics. It's entrepreneurship. It's frankly, the ability for business to flourish. There's great entrepreneurship in India around tech, and I think there will be more and more around AI as well. So that's something that I think, India's poised to do more in. And I could tell you a little bit about what we're doing, but it's, so consumer tech, I think. Now, the sector that I think India has a great opportunity in is manufacturing. That's something that obviously India can capitalize in terms of what's happening, in terms of people moving their supply chains away from China. I think all companies today are looking at their China operations, number one, making sure that data that's produced in China stays in China. That's important. It's important to the Chinese regulators. So we have all our clients looking at, what technology they're using in China, what data they're producing in China, and this is important to both sides. And so that's number one. Number two, all our clients are going down the route of more of what's produced in China is sold in China, what's produced elsewhere is sold elsewhere. So those, I would say, are two rules of thumb. And then, I do think the world wants to see where China is going from a future perspective. I think their economy has slowed, and they're still kind of coming out of the COVID period. And then there's going to be, right now, I would say, there's acceptance to invest in China in certain sectors, certainly not in tech, and certainly not in any kind of sector that could have a geopolitical consequence.
All right, that is a very interesting chat with EY and the global CEO. But with that, we're going to wind down in this edition of Business Lunch. Thank you all for tuning in. We have Mid Cap Radar up into.